You just click a button.
Consistency, baby, consistency.
Yeah, you're telling me, man. I
All
was
right.
watching what's that movie? Gosh, I watched it last night. Oh, John Wick. Have you guys seen that movie?
Yeah, at least one of them. Oh, what are there, like four, five, six of them? I don't
I
know.
think there's three.
Three?
The
I don't
first
know.
one's the best, but that's how they describe John Wick. Man of consistency and determination.
Yes.
That's me.
Well, all trading involves a substantial risk of loss there, Blake.
It does. Tell me about it. I took a loss this morning.
I've
Yeah,
heard.
past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, hire and consult somebody. Um, like Edward Jones or was that commercial with the we're not a fiduciary. We're a fiduciary. We're not a Fisher Investments.
What a
Anyway.
scam that is. That is the single biggest scam in financial planning. We only do better when you do better. That means they take a bigger piece of your profit when it works.
Mm.
Seriously.
No, I understand. Well, that's why running an ETF would be way better. We should just get everybody to buying our ETF, Jack.
You know,
Uh, maybe I
somebody
should
told
ask.
me
Maybe I should ask Kraken to file the paperwork for us and get a ETF spun up.
Wouldn't
the
that be
Market
awesome?
Masters ETF.
Yeah,
I'd buy that.
we
Yeah.
could.
Ticker
My
symbol JEFF.
I don't
my
know.
account would go up and to the right the entire time. I wouldn't even have to worry anymore. I could just
Yeah.
retire. I'd be set. Just have you two guys working for me.
Well,
Not
there's
to
But
no
mention,
Jed.
somebody legitimately told me that their financial advisor charges them 6% per trade.
No, yeah.
And I got to thinking about that. I'm like, that is a lot of money that you're just throwing away to let somebody trade the market for you, especially if you have a lot of money in that account. Like that is a substantial amount that you're just losing right off the top. So just blows
Uh,
my mind.
I thought Mama would be a good one, but there's already a Mama in Market
Oh,
Masters.
dang it. Oh, that's a commission charge. So that's even worse. That's them just paying themselves.
Meat, fish, and dairy, Mama. I've never even heard of this company.
I haven't either.
Mama's Creations. Let's see what they offer. Welcome to the
Ask
show,
your
everybody, where we just make stuff up and throw
Talk
spaghetti at the
about
wall.
food, see what happens.
yeah, see what sticks. Mama's
One stop.
Creations.
I guess they supply grocery stores with ready-made meals, is what I bet.
Okay, well, maybe that's a half decent company then. We still, they're never going away. They're food, so
That's a tough racket, man. That's all that home delivery pre-made meal stuff, right?
like
Yeah,
swans.
yeah, these look like the things you buy at the grocery store. They're already pre-made up.
Yeah.
That's what this looks like to me.
Mm.
Interesting.
I don't buy that stuff.
I
I
don't
don't
know.
really buy anything. I haven't been at a grocery store probably since 1987.
You just grow all your food?
No, Mrs. Jack
Oh,
goes to
duh.
what's that thing called? Whole Foods almost every day.
Oh, okay. That'll do it.
Fish
It's
is
called
fish.
whole paycheck.
I don't really get too much good stuff. No steaks, mostly fish and chicken.
Hey, that's good.
Yeah, it's Whole
Man,
Foods every day.
that sounds like a terrible way to live.
It is. It's bad. It's so bad.
I just ate some tamales and bacon wrapped jalapeno poppers and
I don't get any of that, man.
You don't ever crave like a steak sometimes?
Oh, I have them. Yeah, I'm not supposed to
Okay.
eat them, but I have them.
I'm not supposed to eat them, but
I only
Yeah.
listen to the doctor like 80% of what he says. He starts talking about no scotch, no cigars, no steak. It's in one ear and out the other. Dude, I'm not, thank you for your advice, but I'm smoking, drinking, and eating steak. So
That's right.
get
Greg
a new
says, get a
doctor.
new
Yeah,
doctor.
I want to get one that just tells me what I want to hear.
You're
They
great. You're
just
gonna live to 300.
No, I
most
don't
doctors,
have to eat like this. It's just Mrs. Jack cooks like this, you know. She's regulating everything. I gotta eat a big salad and a bunch of vegetables and stuff. Maybe every now and then if we go out, I get a steak.
So,
okay.
so tell me, eating that way, does it actually make you feel better?
Yes,
All right. I was gonna say we can hire Dr. Kraken to give you a whole new idea here.
that'd be okay. No, yeah, it's
Oh
good.
goodness.
Anyway, triple income report for today. I guess I should grab the link to share with before I share my
Oh
personal information.
yeah. Yeah, get us that link. Give it to
We
the
got,
good people. They
we
want it.
got, we got today's picks.
Oh, Michael, that's a good question to ask your doctor. How many 100-year-olds he has? There you go. Find the one that has the most.
George Burns doesn't go because he outlived four of them, right? George Burns.
George Burns,
You guys
the
don't
man.
remember George Burns, do you?
No.
Little old dude. He played God in a movie or something like that. Little guy with big black glasses and had an unlit cigar all the time.
I thought you were talking about
Be a
the
lot
guy.
healthier if he lit
I thought
that.
you were talking about the guy on The Simpsons. You know.
No. That's Mr. Burns, I think. Yeah, George was a classic old dude. Yeah, he was awesome. George and Gracie. We're going way back to the 50s now. Yeah.
Man.
Well, with George Burns, if he would have lit that cigar, 12 cigars a day, multi martinis too. That's a little rough.
Mr. Burns is Montgomery Burns.
Montgomery Burns. All right, what's Kraken got for us today?
Well, you know, it's a lot like yesterday's. Not a lot changed. Top 10 looks very similar.
I did that IWM trade, just so everybody knows.
Okay.
And
And I did the what else did you pick? Tesla.
it actually dropped Tesla out of the top 10, but it's yeah, we've got IWM, Microsoft, Ford, Apple, JP Morgan, MasterCard, Meta, Goldman Sachs, Home Depot, and Chevron. Dropped Visa out of the top 10 too.
And BAC.
Well, down here we have BAC, like roll on down, roll on down. It's got these tiers. We've got Ford and BAC, capital tiers friendly. BAC actually showed up on another scan of mine. That one might actually be a super bullish trade. I might actually put some on that one in a bigger way. I'm thinking about it.
How
We
big?
got, I mean, like a
You
full size potential position, which and right now I've got around 120, running like 7 positions. Close my calculator.
120 per position?
No, that's 120 account. 120K divided by 7 positions. So be looking like 17,000 on it. So at 4,800 bucks, PXO does all this for me, but divided by 4,800, you're talking about like 3, maybe 4 contracts.
Mm-hmm.
Nothing too crazy. I don't have $1 million account. I mean,
Well, it's not really the size. It's just that you put the same amount, right? It's discipline and a percentage allocation on each trade. That's
yeah.
smart. That's everybody needs that for a system so you don't get too heavy in one or you're playing one too light.
And see that this is the account that we're talking about doing this in potentially. And, my year performance up 77,000. Look at that. I started with 75, now I'm at 77. So,
And you started in April.
and it
So
started April. So, it got more than 100% return, just shooting for 40% return.
almost 1 year. That's
Boom.
fantastic. You're running a little rich relative to your goal of 40%.
It's okay. I can run rich. I'll meet the target before I get there. Instead of
Yeah,
it taking 5 years, maybe it'll take 2 years. I don't know.
it'd be
We'll see.
unbelievable, man. That would be unbelievable. If you got up to 50,000 a month, paying yourself 50 grand a month off that same capital, that'd be great.
I mean, right there, 15K a month right now is what I'm basically running at. Very
It's real
consistent.
good.
Very nice.
What's crazy? Look down here, year to date, it was showing me yesterday. It was said I was in the top 50. Yeah, look at this, top 50
Nice.
on K Info.
Nice.
Year to date, top 50. So you think about like 25 grand first 2 months of the year, Some people think that's a bunch of money. Some people think that's not very much money, but it's in the top 50 traders on K-Info.
Out of thousands, right? How many?
Yeah, out of thousands. Yeah, so that's pretty good.
That's pretty good, man. That's pretty good. Don't sell yourself short. That's really good.
Well done, sir, as Gregory
Yeah.
said. Yeah, you know what you're doing. You have a system and you're working the system. You got a system that works, work the system. This is good stuff. Beer money turning into big money, says Michael's iPhone.
Yeah, I mean it
Beer
really
money
is.
trade in there, right?
Yeah, the beer money trade hits every day. That's how I consistently make money every day.
I like it.
So, and if nobody's seen the beer money trade, it's just a credit spread on NASDAQ, 3 standard deviations out of the money. I post it on X every day, which I can drop X in the chat right here, right there. Post them on X every day. I've got 95 in a row right now. People are like,
Dang, dude. I don't have 95 credit spreads in a row.
yeah, number 95 right there yesterday.
Wow.
And it's not chump change either. You can see this account with real numbers. $20,000 profit right here in this account. And that's not the 50K challenge account. So I got a little extra gravy going in the background.
There you go.
I'm mad.
Yeah, overall, all my accounts, I might hit 50K a month in July. That'd be nice. So
No, I have a pretty big portfolio that I don't count that as part of the monthly income because I don't take any income from it. I just watch it appreciate. Do you have anything like that? Any portfolio that you manage that you just
uh
hold?
I mean, I got the stuff in this account, the 50K challenge account. I can't really pull it up.
Mhm.
Robinhood only lets me be logged into the other computer for whatever reason. I've tried to pull it up on here several times. Now, I do have a retirement account that's got various stuff in it, like Tesla and not very much Tesla. I've got like 5 shares, 6 shares, 6 shares
Mhm.
of Tesla. Um, I've got 700 shares of TSLL, selling calls against it. Looking for other stuff here. I got some Chipotle in here and some Chewy. They're both down. A little bit of crypto stuff that's been sucking. And yeah, I mean, can't all be winners, I guess.
No, it can't be. But having a portfolio of stocks, that can really add up. I mean, you can make at some point, an extra 50 grand a month just from price appreciation.
Yeah. I mean, it's not like I'm just sitting here only doing credit spreads. I mean, this account I'm using so Robinhood lets me trade margin, but since I'm doing credit spreads that expire at the end of the day, I'm using the margin, or at least half of the margin off my account to do these credit spreads, and then they roll off at the close, so they never actually hit the margin fee. Like they never like the overnight hold, paying interest and stuff like that. So it never actually hits the fee. So I'm just using their margin, using their money to make money, to boost up this account and doing it every day consistently. I don't recommend that for everybody. You got to make sure you know what you're doing, but it's working out pretty good for me.
Yeah, it sure is. Again, that's having a system that you know works and working it.
Now, I started doing this beer money trade, gosh, probably it was in July, back about the time we started this show. I started doing it. I was doing it inconsistently. I was doing it naively too. And yeah, I made quite a bit of money and just doing one contract a day. That's all I was doing, just one a day. I knew it had big risk. I wanted to try to figure it out. And it took until October when I took a loss. And that I think it shows up. No, I wasn't doing it in this account. So it doesn't show up in this log, but I did take a loss in October. And that was October 10th. I was still doing it naively. And people are like, well, so you could take a loss. I was like, yeah, you could take a loss. Any day you could take a loss. But when I took that loss in October, it wasn't a full loss. It wasn't a $5,000 loss. It was I closed it for like $12 or $13 a contract. So it was like a $1,300 loss. And that was it was kind of big, but it only took me about less than a month to make that back with that trade. And But what I did after I took the loss is I dug in and figured out the statistics behind the trade. Like, what should I actually be doing to make that turn that into money consistently and profitably? And I dug in and pulled a lot of data out of TradingView right here. I Now a lot of people are like, well, why 130? Why this? Why that? Some of it comes from my experience, and then I backed it up by doing a lot of testing. So first off, just in my nearly, gosh, it's going to be, hate to say this, it was getting close to being like 20 years since I've been trading options. And just in like that 20 years, as we picked up weeklies and as we picked up dailies, I've watched this on the expiration day. There's this time premium suck out that starts anywhere from like 11 o'clock in the morning till 2 o'clock in the afternoon, depending on the day. It's not universal. It's not always the same. And Jack, you being a market maker, you probably could explain more about why this happens. But somewhere in that late midday on expiration day, all of a sudden, that volume that price hangs in there, hangs in there, hangs in there, and then starts diving off into the close. And it's not, we pull up all these beautiful like equity curves, like this is the way an option decays. But in reality, that last day, it like hangs in there, hangs in there, hangs in there, somewhere around 11 o'clock, maybe 12 o'clock, maybe 1 o'clock, maybe 2 o'clock. All of a sudden, it goes, and then, that last couple hours of the option's life, it plummets out.
Yep.
And I found on average over lots of years, back to 2020 is what I pulled here on this one. I actually pulled 20 years back in a different one, but price was so crazy different that I found before 2020, it just didn't really matter the same. So I pulled back to 2020 in this data set. I found from 130 to 4 was the lowest amount of volatility in NASDAQ. If you could get in at 1 and get out at 130, get in at 130, get out at 4, and do that relatively consistently, it's the lowest volatility. The average move from 130 to 4 is like half a point higher. Think about it. The average day in the NASDAQ from 130 to 4, the average move is a half a point higher. Yet the volatility crush in the options is like extreme in that last 2.5 hours of the market. And like I said, Jack, you may be able to explain why more than I can
Well,
since you were a market maker.
yeah, it really, if it's out of the money, the price of it's going to plummet. Once they realize it probably won't be in the money, around 11 o'clock in the morning, once everything settles down, if something's out of the money, if there's any premium in it at all, that's the kind of stuff you'll see just it'll really be bad. It'll just, expire worthless. That's the whole thing. Is it might have a little value before the end of the day, but it won't have any value at the end of the day. So the ones that are close to in the money, the ones that are out of the money, they're gonna just gonna crumble. And when the market makers realize they don't have so much risk, they'll start dropping the bid on a lot of these things that are out of the money. And we see that all the time. It looks like it's a misprice. You can catch a market maker, not in this, but in an individual stock. You can sometimes see where the guy's asleep and the bid is still too high relative to it being about to expire that day or the next day. So that's really it. It just goes to an intrinsic value piece. All the time value gets sucked out of it.
And see, I actually have 6 contracts rolling already. I've got this one right here, 90, 3 standard deviations out of the money. I use the percentage of profit to figure this out. A lot of people are like, why don't you use delta? Why don't you use touch percentage? This is what I use and this is what I rely on right here. This calculation, probability of profit, 99.5, and it doesn't go any higher than that. That's basically 3 standard deviations. I jumped into this just a little bit ago, right before the show started. We can roll down and see this. 80 cents right here. I got those 3. And I pull this up so we can possibly see the other one. And 70 cents for the other one. So 70 cents for that one, 80 cents for that one. So rolling 6 right there. I'll probably add some more after I get off the show at a higher price. But what I do is I jump in here and try to take advantage of that volatility, IV, price, there's lots of stuff put in here. Time value, theta decay, whatever you want to call it. I jump in there and try to take advantage of that every day. Sometimes I go early, sometimes I go late. FOMC days are dangerous days. Right? I've equated this to walking out in the street and picking up a $20 bill. Today it's walking out in the street and picking up $80 right there. So what do I post on X? I get in closer to that 1:30 time frame, and I tell my Term Market Trading Lab members first, give them time to get in, and then I post it on X. So if you're not able to get the prices on X, Chris, you're kind of burning me down a little bit there. It's because I give my insider members opportunity to get in before I post it publicly.
But Chris, if you know how to do it, then you wouldn't have to wait, right? And he explains it pretty good to the point I think anybody could take it and do it themselves. But if you want to wait for his fill, you might not get the same fill.
Now, if you're trying to be 3 standard deviations out of the money right now, at right around noon, you could be right up here closer to the money. Right there is 2 standard deviations. A little bit, that 99.5 is right there. A couple more away is 99.7, which would be 3 standard deviations out of the money. That's the 24,650, 24,600. You could get $1.23 right now, $1.13 right now. It's going to jump around a bit. $1.03 right now. And if you were jumping on that, the crazy thing is I did pull all those numbers. And if you go back to noon instead of 1:30, that extra hour and a half of time brings 2% volatility in the NASDAQ. 2% at the current prices is 500 points of move. And if NASDAQ is sitting here right at 24.9, think about it, 24,980, and we dropped 500 points, that'd be 24,490, which is below the long strike. And that's one reason why I wait till 1:30. Now, straddle, you can say the straddle should be one, let's get our lingo right. The straddle should be 1 standard deviation, but it's not exactly. It's not perfectly. And it does change by the moment. Like as all the little factors that go in here change, this changes by the moment. And right now, you can see it's approximately correct because it puts us right there where the standard deviation line is. That's not always the case. Sometimes you do the straddle, it shows up here, and the 1 standard deviation line shows up here. Now you can count the strikes between here and the blue line on trading, Tasty Trade. That's roughly 1 standard deviation. Down here, roughly 2 standard deviations. And then you can go that many strikes further. That's 3 standard deviations. I like to try to get at least 40 cents on this. 50 cents is 1% a day if you're on a 50 wide. Now, some of my members like to do 40 wide. Some of them like to do 30 wide. Some of them like to do 60 wide. You can play accordingly. You do you, as I always say. So there's no rules to this except make money and don't let it go in the money.
Eduardo asks about doing the same principles and concept strategy on the rut.
Good luck with it. That's I'm looking at revamping my green light income alerts to take advantage of a similar trade on SPY. I got different rules to it slightly, and I've been putting out those on green light income alerts if you're interested. And you can call the team, I guess, and pick up that. So I've been putting out those on green light income alerts with SPX. Russell, I don't know that there's enough volume to be. There's just people just don't play Russell like they do SPY. And look how tight these numbers are really tight. I don't know. There's not, SPY has way more contracts, but that also means the premium to take advantage of is a lot less. Look at these thousands of contracts flying, but at the same time, S&P can be a cruel mistress. There are people that will go get these contracts. There's trader desks that will push this down. If they see enough premium sitting here that they can go get, they'll actually, some days out there, they can put $20 million at work in the market and push the S&P 500 20 points and with a little bit of leverage. It's kind of crazy that you can push it around, but they can push it around. And it's not really market manipulation. And another thing to look at here, like look at the calls flying versus the puts flying. Some people iron condor this, and that's where you get some volatility too. So I'm trying to figure out the best way to play SPY. I don't really have the same rules going. NASDAQ, why? Because we hold this premium in. NASDAQ, S&P doesn't have the same moves less than a point from 130 to the close. NASDAQ does. It's just to me, I come at it every day, 3 standard deviations of the money. You're going to lose once every 333 days. There's 250 trading days in a year. So losing once every 333 days, that's actually just getting your short strike touched, not actually taking a loss. Getting your short strike touched once every 333 days, that's once every year and a half. Not bad already. And the long strike is roughly 4 standard deviations out of the money. Not exactly, but it's getting close if you play it right. So that'd be once in 1,000 days that you would take a loss on 4 standard deviations. So
those rare instances where it is going against you, very rarely, what do you do? How do you manage it? How do you get out? What do you
the
do?
one day that I did this naively and it went against me, as before I was playing 3 standard deviations, so there's a lot of caveats and I've never had a day that went against me since that first time I got in trouble.
No,
After I
generally
started,
speaking, though, how would you manage it if it was
so my
going?
plan, I'll just go through it. I'll show you what happened back here, October 10th, what I should have probably done different, what I do now. Let's see if I can pull October 10th here. Come on, baby, work with me. Where's the numbers? We're not even going to load that far back. Cool. God love it. God love a duck. There we go. There we go. Let's see if I can still pull back to October 10th. Oh, trading view is just going to be slow today. Cool. Keep going, keep going, keep going. You can do it. December, November, we're getting close. Keep on keeping on. I'll show you the lesson I learned, and then maybe I remember what happened October 10th.
No.
So right here, right in here, about 10 in the morning, Trump tweeted he was going to raise the tariffs on China again up over 100%. And the market started dropping. And we got a little bitty bounce right about, I don't even remember what time it was. We got a little bitty bounce. I was like, maybe, possibly we're going to get the same, little bounce here at 11 o'clock. Then we came on down 1:15. We were bounced a little bit. So 1:30, I was like, this looks reasonable. So I jumped down here below the money. I was actually right at 24. I think it was at 24.30. 24.230. Yeah. I was at like 24.230. And then whatever 50 strikes below that is 24.180. And had that credit sitting there. And it started selling off again. And it sold off. And it sold off. And it sold off. I was like, oh crap. And it sold off some more. I was like, oh crap, more. We got a little bounce. I was like, thank goodness. I'm out of trouble. I'm gonna go close it while it's before it gets more in trouble. So I closed it for that $12 a contract loss. I'd only gotten like 40 cents credit, so I booked a sizable loss, and then it dipped, and it actually only ended up 6 points in the money, which would have been a $600 loss. So I actually made the loss worse by closing, but I survived to play another day. So that's that was a lesson. But Then this happened again on November 21st. It wasn't a tweet that day or a post or whatever you want to call it, but it was the same freaking chart pattern. Look at this. Started about 10 in the morning, dropped down. This one lasted a little longer before it bounced at noon. Came on down 1 o'clock, same kind of bounce. But you know what I did this day? Instead of playing for close to the money and getting paid bigger, I was like, I still remember what happened in October. Still remember what happened last month. I was all the way down here below 20. I was at like 23.9. I was 700 points below the money
Hmm.
and I collected my $40.
Now, right there, I got to tell you, it's rare that a market will exist for something that far out of the money and pay you anything. And that's because of how volatile this is. But that ability to get that far out of the money, that's what's jacking up your probability of profit.
Yeah.
You can't get any higher than 99 and a half. And that says, if you look at what you've got, it says greater than 99.5% profit.
Yeah. Probability of profit. Yeah.
So it doesn't get higher than that. But this is a unique asset in the way it trades because a lot of stuff, if you go that far out of the money on a percentage basis, there's not going to be any bid for those options.
Yeah. It's so crazy. Like, and I haven't been able to really close them early unless price came down really close and, people are trading. And I've had to pay, that day I closed it, I had to pay more than, I had to go at the ask to get it closed. So, um, somebody wanted paid. Somebody wanted my money. But yeah, I haven't really gotten in trouble since then. I've done 95 in a row, like 95 market days in a row
That's so cool.
as of yesterday. And this kind of stuff exists. I mean, I know you do this on AVGO. Usually you go a couple days out.
Hmm.
Same kind of thing though.
Yeah.
If we look at this back 95 days, we can see 95 bars is right back here. You can see I've been playing every day since October 14th and won every time.
Knock on wood, brother.
Yeah. Hopefully I keep getting lucky, but that's how I make. I mean, you
It's
know.
not luck. It's not luck. You exploited a little, you found a little niche and you've exploited it.
Now back here in October, I was still playing one contract. I was playing one contract into November. Playing one contract, playing one contract. Maybe I played two contracts a couple times. I was mostly just playing one contract, and I played that from July through the loss through the end of October. And then once I decided that I had finally figured it out with the calculated risk, once I had some rules in place, I started ramping it up. Now, $40 a contract is what I did all the math on. I've been going for 1% a day more recently because I figured out that would be, get this, what's 1% a day over the year? Jack, do you have any idea?
365,
Well, I mean, 250 trading days a year, right?
250%. Yeah.
250%, but you're compounding daily. So what
Yeah.
does that make it?
I
That
don't
makes
know.
it 1,100% return over a year.
Dang, dude.
And that's why my account is going straight vertical right there. People are like, oh, you got too much risk. I'm only using like half of the margin. So even if I took a whack, I can still get back.
This is
So
going to be chapter 4, Chris, in Jeffrey's new book, How the Professor Trades. I'm working with a bunch of different titles of the book, but this is a credit spread trade, which is still considered an income strategy. Uh,
yeah,
Not very
this is an
much
income
different than
strategy.
selling, you start off by selling an option. So this takes advantage of premiums. It's a credit spread, not a debit spread. So he's getting paid to take the trade. He's getting paid up front. And if the trade works, he gets to keep 100% of the net credit he took on when he initiated the trade. Very
Now,
good.
if someone wants to see more of, more of the explanation, there's this goes right to the point in the video where I talked about it on YouTube, right after I started doing the statistics for it.
Has anybody seen a trade with a higher than 99.5% probability of profit? Because if you have, and you're in our group today, I'd like to know about that. I've never seen one. I got a 97% win rate on my strategy that I love the most that I do. And I don't have 90 winners in a row, though. I think I'm knocking around 50 in a row.
Yeah, so I mean, this is to me, it's just a way to consistently pump out some profit in the market. So
Yeah,
I, I,
daily though. See, that's the thing. You make 40 bucks. Next day you make 60 bucks or 80 bucks. You keep compounding it, keep rolling it.
I mean, you can see, like, I'm not fluffing right here. Just this one account has $19,000 profit this year, and the picture I put on there on uh yesterday, the one that's posted on X has two accounts. There's three accounts in this Tasty Trade login. So when you combine the two accounts, it's over 20,000. Just this one account right here that's in it right now, 19,000 bucks.
Mm.
I've got 450 bucks on early trades, and I'll add another chunk of contracts after I get off of here. Probably targeting that $50. These targeted a little richer. 6 contracts at 50 should be like 300 bucks, but I got 450 bucks. So I'm actually running 50% more. So instead of 1%, that's actually like 1.5% I'll make on that money today. Just juices it up right there. How many points on the money? You tell me. It's a flexible thing. It's not a there's not a everyone wants to put rules of this. It's 3 standard deviations on the money. How do you figure it out? It's 3 standard deviations on the money. What are the rules? 3 standard deviations on the money. That's what it is.
Okay,
Like
okay. Explain the standard deviation. I think you're a little over their head, which is no problem. But yeah, okay. What is this? What is one standard deviation? Then they could figure out what is three.
Yeah, so roughly 1 standard deviation of money. And I use Tasty Trade to do it for me because it draws it on the chart right there. I don't have to do anything else. Count the strikes, that's 1 standard deviation out of the money right there. The other way to do it is to look at the probability of profit. All right. So 1 standard deviation is 68%. And you divide that in half, and that's actually, you'd have to play both sides. Now, if you're more of like, I want to know the real number, just do the straddle at the money.
Mm-hmm.
That roughly gives you the 1 standard deviation right at the current moment.
Mm-hmm.
Roughly.
Like a market maker move.
It's not perfect, but it's roughly. And see, right now, it's not perfect on the line. We're off of strike. So it's not perfect. Now, double that, that's 2 standard deviations. Triple it, that's 3 standard deviations. All right, you want to know how far out of the money? It's not really a number of strikes out of the money. Now, 300 points is kind of the biggest down move, roughly, that typically would happen in NASDAQ. Now, more days where the market's more calm, you're going to be tighter than 300 points. Days where it's more crazy, you could be 700 or 800 points. The whole point is just to get your 1%. Don't be greedy. All right. I went early with a smaller risk, grabbing a little bit of extra cheese. The big chunk I'm going to do later, and this is not the only account I do this in. I do this in another account that has almost 20 contracts rolling. How do you how do you compound your money? You make 1% today. Tomorrow, you have what you had today plus 1%. So you have that much more money tomorrow. And you just size up your contracts.
That's compounding. Yep.
That's how you compound.
You roll the profit into the next trade as part of the capital.
And I don't siphon anything out yet because I'm not at my $50,000 a month goal.
But that is going to be a great day when you take that first check or wire that money over to your checking account. It's going to be an amazing day. 50 grand. Mrs. Jeffrey is going to love that.
She's already planning.
She got it all spent already?
Probably 3 times over. She I don't know anybody else that can rub a dollar together and figure out she has 3, even though it's still 1 and spend it. and then spend it 4 times.
Oh, I don't tell Mrs. Jack much. I
So
don't want her to
anyway,
see. Yeah.
so this is the trade I do every day that makes, just consistent money. But I also have a whole set of wheel trades going that
Hmm.
I'm making money. And that's already, like, that's just sitting there in the background too. So you were like, well, you're making all your money off of this. I'm making my daily money off this. When you look at we come in here and look at the last 3 months and trying to remember I think it's when I click on trades, it shows you these big spikes. These big spikes are when I'm selling those extra, even the little spikes in here are when I'm selling other positions, when I'm selling extra premium on those wheel trades. So they're in here. I mean, they're in here all the time, getting a little extra bit of money here and there and everywhere. And sometimes it's a really big spike. A really big one there, really big one there. A couple times I got really lucky on the wheel trades. Booked it out at the top of a move. That was Rocket Lab. This was Dollar Tree. Both of those we talked about right here on the show. You can see where I quit pushing so hard right after I made the big win. I'm like, every time I take a big win, I've turned around and taken a big loss and I eased up. Like that's just muscle memory, right? I've done this a ton of times, even during COVID. Took my big $1 million win, and then I took some losses, like little bull losses, cut, seems like 1,000 paper cuts. So I eased up. And then September, toward the end of September, I was like, what the heck am I doing? I've been playing those beer money trades and the other accounts, just real small. I need to start doing those consistently. And then throughout, in October 10th, and then there was a loss in there in October 10th. I don't think it was right there. I don't think I've logged it in this account. I don't think I traded in this account, but right around October 10th, sucked up day. But then I was like, I can consistently do this. And you can see it growing and getting more consistent.
A lot of people would have quit. Just telling you straight up. I mean, we talk to customers all the time. A lot of people would have quit on that loss. And I think it's important to understand when you have a winning system, you have to stick to the system. Even if you have a loss, you have to stick to the system. That's part of it. And you can't quit. Look what would have happened if you would have quit and gone on to do something else, right? You would have just had that, but you don't have to live with it. You can work it out. Keep going, keep working the system.
And where this trade come, or where this challenge come from to make 50K a month? It came from the guru that got me started in this game. You know, I was good, bad, or ugly for everybody here. This guru thing we do, it's a game of ups and downs. We sell a new product, we make lots of money, and then we keep trying to get new people hooked in, and we go through dry periods. Sometimes if people get a little sour on the market and want a refund, we go through some negative periods. It's tough. Like it's tough to get a big chunk of money and then to get no money. And I was talking to my friend of mine that got me started in this, Rob Booker. He said, dude, you know how to trade. You know how to make consistent money. Why aren't you just doing that in a taxable account? I was like, well, the way I came up, I was always told just to put all your money in retirement and make your money there tax free. And, then you don't have to pay a tax bill on your trading. He goes, well, how's that going for paying your bills? And I was like, well, I can't take the money out without penalties. So, it's not doing me any good for paying bills. He's like, so why don't you make a taxable account and make all the money you need? And it was like a light bulb moment to stabilize my income. And that's why I got started in this right here. I didn't have a tax. All my money to trade with was in retirement accounts. So I actually had to borrow the money to get started in this. This is actually on borrowed money. Why am I so careful? Why am I so very adamant about always making money every day? Because I borrowed the money to start with. And so if you have something and you proved it to you, then here's the thing. I did months of work before I borrowed the money, before I started back here in April. I did 3 months of prep work last year. Actually 4 months. I started in January. Proving I could make consistent income. just doing one contract on the wheel. Did it on, at first, it was just one stock, then it was two stocks, then it was three stocks, just doing one contract. And after 4 months, I proved I could do it basically weekly. I borrowed money and started charting it publicly. And I was doing pretty good. Like I said, I got that big gain on Rocket Lab, eased off, came back in September. I was like, what the heck are you doing, man? The goal is to pay back that money. You gotta make it back. And then started doing the beer money trade more. Started being consistent. Started trying to get a green day every day. It's not easy. This is not like I've done this before. I'm sitting here, this is a live record of me doing it. I know I can. I'm going to get there. I talk to Rob all the time, by the way, for those of y'all. Like, Rob's a good friend of mine. Got me into this. Good friend, good mentor. So,
I believe you'll do it. If you were a
yeah.
stock, I'd go long Jeffrey Turnmeyer. I don't
I
know if
mean,
I'd sell naked puts on you though.
yeah, I can be a little bit volatile. Got to be careful.
Yeah,
Anyway,
that's good stuff. I saw in the comment one bad trade can wipe out a bunch of wins. That's one of the biggest myths of of a credit spread is that it's possible, but only if you let it, right? The only way you would take a full loss is kind of if you just let that happen or if it moved overnight. But most of the time, I've not seen that happen, and I've been doing these for a long time. It
so
can, if you're picking the wrong stock and you're using the wrong strategy and you don't have a tripwire, it can, but it's not always likely. Like I said, I've rarely seen it.
so Jack, you've been in the market a long time. How often, and for the audience, how often does something major market moving that's not FOMC hit between 1:30 and 4 Eastern time? How often does something bad happen in the late afternoon?
I don't know, I can't recall it. There's a
Usually
little
bad.
bit of a lull in the afternoon. If you believe in news flow theory, afternoon news doesn't even come out if you look at it. And there's kind of like a little nap market makers kind of take. I saw somebody write in there about that from like one, you eat a huge meatball sandwich and you're working on the NASDAQ market maker desk. You're going to get a little sleepy after that big meatball sandwich. So there's a little lull in there. But like you say, not much happens. It's what's going to happen happens really early in the morning, that first hour, and everybody's digesting the news. Any news that comes out during the day doesn't get much of a reaction. And in the last 10 minutes, the professionals control the close. They're going to move it in the same direction it's been going in the last 10, 15 minutes. But there's nothing going on in the late afternoon, my friend.
Yeah, and that goes back to why do I do this in the afternoon? And when the bell rings, this trade's done. There's no extra innings. There's no extra anything for the Nasdaq trade. If you were to do it on S&P, there's no extra time for that one either. When they expire at the bell. That's it.
Very
There's
cool.
nothing else. I get, at Tasty Trade, I get the margin back immediately at the bell.
Now that's
At
important, folks, because what you might not realize, like the options I use on regular stocks, even though the market closes at 4 o'clock on Friday, they have until 11:59 p.m. Saturday night, if you could believe that, to do any assignment, which means you might not find out till Sunday or Monday if you're looking for an email. Whereas this game, it's over. When that bell rings, this is game over.
See this right here, 4 o'clock?
Boom, done.
That was it. Those are gone. Removal at 4 o'clock. They removed them out of my account, zeroed it out. I kept all the credit.
All kind of crazy stuff can happen with a stock. I've been assigned TSLL when it was out of the money. It was 27 cents higher than the close, and I still had it assigned to me. Just all kind of crazy stuff. But not with this. So if you want to keep it clean, down to the penny. I'm
Yeah.
not doing that. That's a great question somebody asked here. He asked. No, I got to tell you, I love Jeffrey and what he does, and I would do that trade, but the only reason I don't do it is I don't do much at all anymore in the late afternoon. Pretty much when this show is over, I'll do about 10 more trades and then I'm kind of done. I got Mrs. Jack and everybody screaming to take them out to the Gulf of America if it's a nice day, which it is today. And so I don't do it. But I love that trade. I do something similar to that. I do a high probability trade, but I put them on Tuesday for Friday's expiration.
And
I'm
Jack's a
getting out
little
of mine
like
in the afternoon.
I'm here and I love the market, so I'm here every day. But Jack, he's a little more he's down there on the Gulf. I'm here in the mountains. It's still cold. I stay inside. Um,
I would do it if I was doing that. And you got to also understand, that I had my fund in Boulder. We traded all day from bell to bell, and that was a windowless office in Boulder, Colorado. That should have been a crime in and of itself. But we just grinders all day, bell to bell, doing hundreds and hundreds of trades all day, using other people's money and taking a percentage of it. And when I got out of that, I decided that I'm gonna, and this is a lesson everybody should do, is use the market for yourself. Don't bend yourself to the market. Build your lifestyle around how you want to live your life and how you're going to use and pimp the market to make money every day, but not be a slave to it anymore. I had investors that I had to answer to, and one of those guys, true story here, one of those guys drove me so crazy that I pretty much quit my own fund. The guy just drove me, an investor. He drove me nuts. I didn't even want to let him put his money in the fund, but he was a good friend with a guy that I loved that really backed me. This dude had all the money in the world. He, one time I'll tell you, I went $4 million over my intraday capital, day trading Oracle. I was on the bid and I was on the ask through other market makers when I wasn't a market maker. And 284,000 shares of Oracle one day I went way over. He came in, made one. He came into my office. His office was next to mine. He came in, made one phone call to Goldman. It was done. Where he wired the cash from his own account. That dude saved my ass. But the other guy, I hated him. So we ended up just dissolving it. And then when I dissolved it, that's when I realized I'm not going to sit here all day anymore. I don't have to do it. Um, I don't want to do it. I'd rather just be out fishing because I've done it so, for 20 years prior to that, just grinder. So now I don't do it. And I got too many people up here pulling me out of the market earlier in the day, so I don't do it. But I love that one. And I would do that one, if I were you, if you like, you can't get a higher probability of profit, right? And he's worked all this thing out. So I probably should do it. What I ought to do is just say, Jeffrey, trade it for me. Here's my account. And
you were gonna give Kraken the money.
I will. If Kraken will do it, I mean, Eris, I'll give it to Eris. I don't know if Kraken might get.
Eris copy Jeffrey.
Yes, Eris, copy Jeffrey, please. Here's my account number. Yeah, that would be super simple. I would rather do that because I'd rather be out on the boat and the fishing is great and I'm snorkeling and
And not everybody trades all day. Like Jack is sitting here telling you after this show, he checks out. Like
I
checks on
do
his account and then checks out.
I do a few
And
trades. I do the ideas we come up with here. I did, IWM, Tesla. IWM's a little underwater. None of it bothers me. I did a ton of hood, but I make the market work for me now. I don't
and,
want, I
and
don't
Jack, as soon as you step away, how much do you worry about this?
I don't, it's not even on my mind. I don't worry about, but I wouldn't do it if I
See,
worried.
that's the freedom most people don't realize.
No,
If you step away from the market and you're like, oh gosh, oh I wonder how everything's doing. Oh man, then you're doing it wrong.
doing it wrong. You probably have too much at risk. That's what I have seen is people are not comfortable with. They say they are, but they're not. I've seen guys open a $500,000 account and they can't even handle it. You know, and it's supposed to be money you can afford to lose. So that's how I look at it. But it's just money, and I know if I take a loss, I can work myself out of it. And doing it so long, I know I can make money at it, and you're going to build your own confidence that way. But I don't worry about it at all. It's just stocks.
Yeah, just stocks. And you know, it all these things are going on, all this geopolitical stuff. And we kind of teased in the teasers that we would talk about this, like the dollar popping. It's putting down pressure on gold and oil. Even though oil's still going up, this is putting down pressure on gold and oil.
People say, why is gold going down? This is why.
Dollar's going higher. Dollar pushing up, gold puts down pressure on gold. Actually puts down pressure on Bitcoin too, which we're seeing Bitcoin push down a little bit. Crazy thing, right? Holy cow, there's something that actually seems somewhat correlated to commodities. It's because all the commodities are priced in dollars.
Yeah.
It's the craziest thing. Imagine that. And then oil, you can say it's finding support, but or breaking out, or look at that. We're at new highs. More geopolitical risk. Are we going to go to 80? Right there at it. Are we going to go to 100? I don't know. We're in the same point. Now, look, I made this point this morning. For oil, look how many times we've rejected this area in the last almost 2 years. Once,
Waiting for that
twice,
to come back
3,
too.
4, 5. This is the 6th time.
Won't hold.
Is this time different? Why is this time different? I mean, missiles were flying here. Other stuff was going on here. Why is this time different? It's not really different. In fact, for those that said, several people told me that, well, the insurance rates for tankers going through the Strait of Hormuz, like nobody will be able to afford. Yesterday, Trump said that he'll insure any tanker going through the strait.
No problem.
He
One more
said,
comment about the trading all day long. Mark says, I'm a retired IT professional. I actually enjoy spending time in front of my PC trading. I believe it. I found that a lot of people that have come into trading, retired from something else, or maybe we're a little bit older, they absolutely love it. But I'm just saying, I was 23 years old, man, and you know,
he
it's
found out early you didn't want to sit here chained to the screen all day.
before I did, but after 35, 40 years of it, I'm giving myself a little half day treatment.
Yeah, so we do have geopolitical tension. It is juicing up the premiums. We do have an elevated VIX, and that juices up the S&P 500.
Look at
So this, though, when we look at VIX in the history, right back here, just look left,
rare, super rare that it spiked.
it does not stay elevated more than a couple days. What happens? Drops back. Should you count short-term duration on this? No. I would go out at least a month to account for this thing calming back down. This could ramp on up through March. You want a date when this might peak out? Here's your date.
Okay, now when can I get back into XOM? Because I've been selling puts. I got called out at 126 and 129, and I've been crying about it ever since.
Oil
So
might rally through March 17th. Why 17th? Anybody know? Anybody know? Jack, do you know?
let me see. That'd be St. Patrick's Day.
What happens on the 17th?
Everybody gets drunk on St. Patrick's Day.
There, Brooke knew.
Oh, Brooke, come on.
It's not CBOE options. There's one specific thing that happens.
Green beer, Mark's going to be drinking. Yeah. What happens?
It's the
VIX,
last day to trade VIX options.
the 17th. Why is this the 17th?
It's right there. The last day to trade VIX options. They expire on the 18th, and then normal options expire on the 20th.
There you go. So it has
So,
nothing to do with St. Patrick's Day, is what you're saying.
yeah, it's VIX options expiration. That's the day. VIX options expiration day is the day that COVID peaked. It's the day that we were on a roundtable yesterday afternoon. I was with a few people, and they were, I think it was Jeff Smith was saying that's the day that COVID peaked. It's the day that the dot-com bubble peaked. It's the day the great financial crisis peaked. It's the craziest freaking thing. Is that VIX options expiration day is when chaos peaks in March. So after that, it's likely to calm down. So we've got another week of crazy and then probably calm down heading into April. Because we usually rally from the end of March through Memorial Day, right there on the 25th of May. So you can pretty much go long the S&P at the end of the month
Yep.
and cash out Memorial Day. Now it's not guaranteed. You may lose money doing that, but on the average, every year it goes up in that time period.
I'll tell you, when you look at that calendar, it's no wonder the years just fly by. Look at that. I mean, that's like we could see the end of 2026 here.
Yeah, coming up, not too far away. I mean,
I know. I know.
we're already almost a quarter done.
Ah, yeah. I think time flies faster the older you get. I really do. I think what used to be a minute now seems like 57 seconds.
Yeah, so you also think about the every day you get older, the next day is a smaller percentage of your life than the last day.
Thank you. That's a very nice comment to end the show with. Yeah, I'm in the fourth quarter of my life. I think so. No, I'm depressed. And easy with all the facts. We don't have to share all the facts. It's too heavy. I'll tell
That's
you
why I
what's
see.
not heavy. What's a lot of ease and a lot of fun is to use this tool to create credit spreads for yourself like every day. So the beer money trade is a credit spread. The credit spreads I'm doing on individual stocks, that's been great. You're getting paid up front to do this trade. And I believe we have, Blake, do you have can you spill the beans for him?
Are you sure you want me to spill the beans, Jack? I
Show,
mean, this is
show him my cheating tool.
yeah, I can show him. I mean, this is Jack's brain in a box.
Yeah,
So whatever
Jack.
you do with this, remember, with great power comes great responsibility. So
Be careful with this thing.
be careful. There's your disclaimer.
Jack in the box.
Jack in the box.
My stock is up and to the right. That's all it is.
Oh, yes, sir. All right, folks, here we go. Stick around. You don't want to miss this.
Thank you. All right, Jeffrey. Blake, we'll see you tomorrow, everybody.
All right.